everybody. I'm sure you guys woke up this morning, just like me, a little hesitant to log into your trading platforms, but my goodness, are days like today slapping the stupidity out of the overexuberance in these highly speculative plays in the market. And I think this is going to allow people to take a breath and realize that, yes, the markets can go the other way. And in the clarity of my transparency, we're going to go into my individual brokerage accounts on my $250,000 portfolio. And I'm going to show you guys exactly how much I'm down, how much I'm losing on all of my positions. So if you guys appreciate that, I'd really appreciate it if you just hit the like button, folks. But before we get into that, let's start by zooming out here and just taking a look at the broader market on my StockTwits watch list just to see how the general markets are doing, because we saw a major sell-off amongst tech, primarily amongst speculative plays, but we have been seeing a nice recovery into the afternoon here, folks. Crazy to see Tesla's all the way back down to where I sold it. I never thought it would go that low again, but taking a look, guys, a lot of the money has been shifting into kind of the recovery plays, the banks. I woke up crossing my fingers because the one stock that really kind of fluttered my heart was Lockheed Martin, because I've been using my line of credit to purchase that stock, and I'm glad that it is actually trending up and not the other way, because my Momentus, my MindMed are just getting slaughtered at the bottoms today. MindMed was down over 20%. Momentus here, ticker symbol SRAC, was down in the 19s. I was buying it in the 27s. You'll see in the accounts in a second here, guys. But if I can make a quick recommendation, and this is a pretty bold statement, but I'm going to tell you right now, you should be buying these dips. Not only should you be buying these dips, you should be aggressively buying things like tech stocks. Not all tech stocks, maybe the QQQs, but if you want some really good exposure, I'm going to give you one example on why tech stocks aren't overvalued and why this just doesn't really make a whole lot of sense. And again, putting aside any of the high flyers here, right? We're talking about really stable foundational companies. And I'm going to use Facebook as the example here, guys, trying to stick to those S&P top 10 companies. Facebook's PE right now is at a 26, okay? It's actually really reasonable when you consider the growth rate is around 30%. And if you don't believe that's true, let me give you an example with a crowd favorite amongst the dividend community, a consumer staple brand that a lot of investors will lean into. And of course, we're talking about Pepsi here, guys, which currently trades at a PE literally almost at 26, right next to Facebook. But when you look at these companies from a fundamental level, God, are they different? I mean, look at Yahoo Finance here, guys. Just taking a look from 2018 to 2020, Facebook grew their revenues by over $30 billion, from $55 billion to $85 billion in 2 years. Pepsi, however, in 2018 went from $64 billion to 2020, where they only did $70 billion, which is a growth rate of only $6 billion. There's a big difference from $6 billion and $30 billion, considering these are almost the exact same numbers from two drastically different companies. Yet for some reason, people think Facebook is a terrible company. And I just don't understand why. Like, I don't understand how something that can grow at a 20 or 30% rate can trade like a regular dividend stock that only really grows at a 10% rate. Like, this doesn't make any sense to me. There's a mass dislocation starting to go on, and I highly recommend, and this is why I was buying tech at all-time highs. I mean, look at BABA today, guys, trading down to 248, another stock that is trading at a stupid growth rate. So this should just be seen as a buying opportunity. I am not taking advantage of this dip, but I have been enjoying the volatility. So let's just get into my accounts. We'll go through each one of them individually here, guys, and just see what's going on. And we might as well start with my Royal Bank account, which, again, actually doing pretty well, because in my diversified portfolio of not getting fixated on meme stocks like a lot of you out there probably were, I have been buying these kind of recovery plays, you know, Toronto Dominion Bank, Lockheed Martin, kind of these boring stocks that no one's really talking about. And in days like today, it's really showing to be fruitful because, to be honest, this blew my mind. Going from the beginning of the month until now, my accounts are down like $1,000. I didn't believe it either, but I got to remember, you know, over the last week here or two, things really ran up. So I was up. I'm probably about down $10,000 if we consider where my peak was. But for the entire month, if I didn't look at my portfolio from the beginning of the month till now, things are relatively null, unchanged. So thank God for diversification, baby. So there's nothing going on with my top Canadian stocks here. I'm up 21% still overall from RioCan, Bank of Nova Scotia, TD. On the lower half, this is where things get a little more volatile. Still doing really good with Facebook on the position. SRAC, and this account, I'm only down 8%, $130. My Qs, I bought at all-time highs. Only down 4%. Not that bad, right? I mean, ARKG is probably one of the worst performers in here as well, down $324. All combined, though, on the U.S. holdings, down 5%. So yeah, I'm not complaining in this account. whatsoever here, folks. So what account is this? I think this is my managed account. So yes, this is where I'm managing Lockheed Martin. So that leverage position with Lockheed Martin actually should be up today because we're up over 340. I just don't think I've refreshed the page, so there's a bit of a delay on my Scotia iTrade account. But nonetheless, guys, I'm still doing really healthy in here. I'm very happy I sold down MyMed for reasons just like this. Every time I sell stocks, I get reamed out. When I sold Tesla, I sold MyMed, there's always a group of people that are like, you're an idiot, you're this, you're that. And I'm like, hey, I'm just doing me. I'm just rebalancing my portfolio because I don't know what tomorrow brings. And here we sit tomorrow where MyMed hit lows of $20 or 20%, which would have been a lot if you were holding the $40,000 I had in it initially. But today, it's barely a blimp on the radar. So I feel like I can still experience the high upside potential it has, but limit my downside risk because today I am sleeping much easier than most people that were probably holding this position. But nonetheless, my worst performer amongst all of this is my SRAC position in this account because I was buying it at $27.35 a share. I'm down 24%, but only just below $1,000. Nothing too extreme here, guys. In my RRSP, even though BABA is down, I got it in at an incredible price, so we're still doing good here. Overall, this account still trading up thanks to Johnson & Johnson, but there's my Pepsi position, which again, guys, I can't correlate to Facebook at all. They're two completely different companies on growth levels, yet they trade for the same valuation metrics, which I don't know what screams is a better discount to me than that, but heck, I'm just going to put that aside because I'm tired of people telling me Facebook is just a regular valued company, but sure, whatever. Anyways, taking a look at my TFSA, you can tell I got like this chip on my shoulder when it comes to people talking about Facebook today. But anyways, my TFSA here, folks, things are good in here. I got some dividends that came in. Things are relatively unchanged. I mean, tech is down, but when you talk about where my buy points are on them, you probably wouldn't even notice because I'm still up 600% on Apple, 100% on Microsoft. My worst position in here as well, Stable Roadhouse acquisition, but only down $400. Add all that up, my SRAC position hit me the hardest. But yeah, I was buying these speculative plays at their premium values, and I understood the risk I was taking, but I took it at a tolerated rate. I still believe in the company. I'm still desperately awaiting for the merger to happen, and I still think it's worth a lot more than where it's valued. So I'm not really being affected here, guys. I'm really hoping this comes to a profound wake-up call that I think is really well needed right now to remind people that, guys, markets don't always go up. Spec plays aren't always going to be going to the moon, and I'm tired of people thinking that when you're up hundreds, if not thousands of percent, that it's not wise to be taking profits. I mean, a lot of people have been led astray. I really recommend that if you haven't heard of a YouTuber named PPC Ian, he really went in depth about why this market is building an illusion and why these figureheads, when you're talking about like Chamath, when you're talking about Chamath Palihapitiya, saying that correctly, when you're talking about people like Elon Musk that are literally popping things up like Dogecoin, like GameStop, and these guys are trading these things and we're finding it so fixating and attractive. The problem is we don't have the kind of money these guys have, and we think that we can pull off the same thing they just did. But a lot of people are getting screwed, and you're not hearing about the people getting screwed, which is why I think it's fun to show you guys my losses, where I'm losing money, to give you guys an appropriation that this is the reality most people live in, right? And I think it's funny because PPC Ian made this point that the people that gloat the most are the people that usually have the littlest, because those are the people that, you know, they're like, I'm up thousands of percent, but they're like up thousands of percent on like a few $100. Whereas like some guy takes $5,000, doubles it, and he makes 10 grand. He's like, I'm up 100%. I doubled my money. But meanwhile, the guy that has 100 grand, you know, only made 10%, but he's actually up more than the guy with 5 grand. It still equates to the same amount of dollar. Why you guys just need to be really hesitant on listening to Twitter and social media and people like Elon Musk. If I'm being 100% honest here, guys, you really need to be paying attention to the stocks that I talk about. Lockheed Martin, boring companies like banks. These are the things that I've been buying, but nobody likes hearing about that. Why you'll even find me making more videos on MyMed and things that people find more attractive and attentive, and I find it fun too. I find the volatility ride fun too, but that doesn't mean I'm not going to appropriate my risk tolerance, which is why I do that on this channel. Read me out all you want for taking profits, baby, but again, I'm only really down $1,000 on the month. So I'm still sleeping easy, collecting them fat dividend checks. In light of all of this, I pass the question off to you. And if you guys want to talk to us live while we're doing these trades, having these really fascinating conversations while the market's volatile, head on over to the Passive Income Educator, guys. I recommend just buying a lifetime subscription. You can talk to us literally whenever you want. Send me a personal message. Send my business partner. He's managing almost $1 million in this market, and we have a lot of good insight on days like this. But you don't have to. You can always come back here and watch me for free, folks. But in light of all that, again, stay cool, stay awesome. And I look forward to catching you tomorrow.